students that were having problems or that didn't understand the system, and really getting into the program, their program didn't explain it very well. And so that really gave us the idea or the inspiration to start creating our own program. And so in 2005, me and Shade over the years have put together all kinds of information on different states, different Tactile systems, how it works, and really started creating our own program then.
Yeah. Now, that is what led up to us starting the business in 2007. We started our company, which is Tactile Solutions, and we did so providing training materials specifically for seminar companies. So we provided seminar companies with the training program that they would sell at their events. In other words, we were a company that would allow them to private label our training materials. So they would put their logo on it, sell it to their people, and we would essentially provide the training side. And so it worked like that for a long time.
Yeah, I mean, really between 2007 and 2014, we handled the training for some of the largest seminar companies in the country. And so we trained over 40,000 students during that time that were essentially using our program and our websites through these different seminar students. And so we trained students from all across the country during that time, over that 7-8 year period.
Yeah, in fact, it was during then that we started to realize the problems that were associated with the seminar companies, and I'm sure that they're the same problems that are dealt with in a lot of industries. It was the cost first. The cost of the seminars was so high that it caused the cost of the training to be high. We realized that we could essentially cut out the middleman. That if we cut the seminar companies out of the process there and just offered our training directly to the students, that we could do that for a fraction of the cost that we had done before. And so that made a lot of sense to us. It made sense to be able to offer the same quality of training for a lot lower price. And that was ultimately what led us to break away from the seminar companies.
Yeah, and it also allows us to use our own tools. Our own training programs would have different ideas for, boot camps or seminars or ways to teach Tactile investors new training, and would bring those ideas to some of these large seminar companies and usually get shut down. And so doing it on our own gives us the ability to really custom our program around our investors and our students.
Yeah, and really that leads us to where we're at today, and this relaunch and what this is all about. We wanted to restructure our business around providing this training directly to the people that want to learn, and so we're structuring everything around that. If you've been online looking for information about tax liens or tax deeds, you've probably seen our videos before. You've probably run across different aspects of free training. We've given away a lot of training, and we do that for a reason. I think that no matter what we train on, I think to be successful with Tactile investing takes more than just some information that we can share. Essentially, that is the history of where we came from and where the company is at up to this point. At this point, everything we do is just directly with the students, and so with that being said, we also want to make sure everybody feels free to ask questions. You can use either the question section or the chat section if you prefer, but you can ask questions at any point during the webinar, and we'll see if we can answer any questions for you about it. So with that stuff about us out of the way, let's talk about Tactile basics. Let's talk about how it works.
Yeah, and there's really three property tax enforcement systems used in the United States. There's tax lien certificates or tax lien auctions, there's tax deeds, and then there's redemption deeds. And so those are the three primary methods that are used, or types that are used in the different states.
Yeah, absolutely. Oh, and in fact, if I added to the handouts here the PDF, the complete PDF here for the slides we'll be going through. So if you want, you can also open that up, and you'll be able to basically follow along if you'd like here, or you can just watch the screen. One of the first things I think that you have to understand in order to really get how tax sales work is to understand how taxes are collected. and to understand the difference between different governing bodies. So first, let's talk here about the difference between federal and state taxes. Your federal taxes are things like your federal income tax, your Social Security. Those taxes don't necessarily go to pay for things that you see around you. Okay, they pretty well go just to those programs and part of this national system. For the things that you see around you every day, those things are more related to local taxes, which would be either state taxes and county taxes. So state taxes would be in the form of state income tax, sales tax, but the property tax is also something that falls underneath state law, meaning that every state has a different set of laws that dictate how they control certain things like property taxes. So part of what that's also going to tell us too is why tax liens were so confusing to us in the beginning and why nobody seemed to have a good explanation for how the system worked. We realized it was because there were 50 different states that all had laws written about how property taxes were to be enforced, and no two were the same. And so it created a lot of confusion as far as trying to determine exactly how it all worked. The county governments, though, they are collecting property taxes under the state law. So they use the state laws as far as to get their power to do that, but they each individually collect their own property taxes, and beyond that, each county can also do things on their own as well, or they may have their own way of doing things. There are about 3,200 different counties in the United States. And so aside from being controlled by the state law for the state they reside in, they can pretty well hold their sales as they wish.
Yeah, exactly. And that's part of what made it so confusing, just like Shade mentioned, is there's so many different counties. And when we first got started, there was really just two systems that people talked about, tax liens and tax deeds. And so the early information and books that we read would have tax lien, a state like Texas, which is a redemption deed state, listed under tax liens. And so when we first created our program, that's where we actually determined what states were tax lien states, what were tax deed states, and also put together that redemption deed states, which are, we'll talk about in a minute, but are a little bit different than either one of those.
Yeah. In fact, let's see if you don't have, I guess if you're somewhat new to tax sales, or even if you're somewhat experienced, I think this might help. Let's go through some property tax fundamentals. Okay, things that are the same regardless of where you live. If you live in the United States and you own property, you pay property taxes. You pay those taxes to your local jurisdiction. So for many of us, it's our county government. It could be your local municipality or a borough, depending on where you're at. But usually it's county, I would say, on the majority of the time.
Yeah, not 90% of the time it's going to be the county. Sometimes it could be a city or a borough if it's a place like Alaska. But usually it's always going to be done through the county level, and that goes to pay for all the county services that we use, things like police, fire department, education. All of those are paid for through property taxes.
Now, it's important to know, too, that these are things that the county has to fund continually throughout the year, like education. It's such a big one. A good chunk of the property tax money you pay just goes to pay for local education, and that has bills on a regular basis there throughout the year that the county has to pay. And so, essentially, the county has the property tax system in place so that it can collect the revenues that it needs to provide those services. And so one of the first things to understand here is when we're talking about tax liens, tax deeds, and redemption deeds, what we're really talking about are enforcement methods for collecting delinquent property taxes. Okay, so we're basically talking about 3 different methods that are used to force you to pay your taxes when you're late. Otherwise, if there wasn't some kind of a penalty for not paying your taxes, nobody would pay.
Yeah, I mean, federal taxes, there's penalties, in fact, jail time, and state taxes could be the same way. And so for property taxes, it's really the property itself, which could act as collateral for the property. And so the first thing, or I guess the first thing we'll talk about is tax lien certificates. And there's a number of different states that have tax liens. And what a tax lien or a lien is, it's a claim placed against a property which affects the owner's ability to transfer ownership. The lien is placed by another party which utilizes the property as security for the repayment of a loan.
Must got cut off. Or other claim.
Yeah, other claim, exactly. And so really what that tax lien is, it's a lien placed against the property, and that lien is acting, the property is acting as collateral for the tax lien certificate.
Yeah, in fact, the tax lien system is pretty neat. You know, we'll take a look here at exactly how it works, but I think it's an ingenious system in terms of the way that it's structured to work, and it is one of the few systems you'll find that is literally made to benefit everybody involved. Okay, so if you are dealing with a state that uses tax liens, and again, that will be dependent upon the state's laws. Okay, so when we have that list of states, those are the states that issue, you know, that have laws that clearly dictate they're to use tax liens and that control every aspect of how this works. So in those tax lien states, what the county will do if you're late on your property taxes is they'll place that lien against your property. And like Steve was saying before, it's using that property as collateral for what you owe. So if you owe $1,000 in delinquent property taxes, they'll place that lien against your property for that amount, for that $1,000. Now, because it's a lien, it has a couple of there are a couple of characteristics of it. First, they will prevent the property owner from being able to sell the property. In other words, you can't transfer ownership as long as that lien is placed against the property. Okay, that's important because that's what gives you the security here. All right. So the other thing that it will do is it can lead to eventual foreclosure, meaning that the lien could be used to foreclose on the property if somebody didn't pay their property taxes. Now, before we make it sound like that's something that happens all the time, the vast majority of the time, people pay their property taxes. Okay, the majority of the time, that's what they're going to do. But this tax lien system is there to ensure or to help them do that. So the county places a lien against the property, and we'll show you next here how it uses that.
And one thing about that lien is that tax lien is a first position lien, meaning it is going to be the most important thing. It has to be paid before anything else is paid. So the person can't sell the property until they pay the tax lien. They can't refinance the property. Really, that lien holds the property hostage until that tax lien certificate is paid off, and then when the tax lien is paid off, the lien will be released and the homeowner can do what they want.
You know, just creating the lien itself, though, doesn't really help the county. The county's only objective here is to collect the money that's owed to them. So everything they do is in an effort to get that money. They create the tax lien itself so that they can sell it. So they're going to schedule a tax sale, and they're going to invite the public to come out to it so that they can get investors there that will buy these tax lien certificates from them. Okay, so when investors come, they'll purchase this tax lien. And if you think about the properties, about I guess what this tax lien has, it's placed against a property, so it's using that whole property as collateral, and it's also going to offer an interest rate return to the investor. There has to be an incentive there for the investor. There's got to be a reason why they would buy this, and it's because of high rate returns and a high level of security. The rate of return can vary depending on which state it is, but in general, I would say it's between about 10 and 18%.
Yeah, exactly. You know, it'll kind of depend on the state and also the buying method. You could bid that down, but it's an opportunity to earn a higher interest rate return that's backed by property, and each one of those tax liens will have what's called a redemption period, which is a time frame that the homeowner has before it pays off.
Yeah, in fact, on the day of that sale, the two things that happen are, number one is the lien begins accruing interest, and number two is the redemption period begins. And so essentially, for the person that purchases that lien, what it means to them is that redemption period means that there is a waiting time for them. In other words, if there's a 2-year redemption period when they purchase the lien, it means that they would need to wait for 2 years before they could take action on the property if the property owner didn't just come out and pay for their delinquent taxes before then. Okay. Now, oftentimes people will just pay their property taxes a little bit late. When they do that, they basically pay the county what they owe in delinquent taxes, which enables the county to remove the lien from the property and pay off the investor. In fact, if you really want to simplify tax liens in general, when you purchase a tax lien, there are only two possible scenarios really that will occur. And they're both based on what the property owner decides to do. The property owner will either pay the county or they won't pay the county. If they pay the county can remove that lien. But if they don't pay the county, then the holder of the lien can use that lien to initiate the foreclosure process. We'll show you that in just a second. So this is just kind of an example to say, okay, this is what happens the majority of the time. Property owners are late with their property taxes. They simply pay that to the county. When the county receives that money, they remove the lien from the property and send a check to the investor for their initial investment plus the interest that they've accrued up to that point. So
yeah, so 95% of the time you're just going to be earning that high interest rate return. And so when you're looking at tax lien investing, primarily that's what you're going to do is you're going to get that high interest rate return, but there is that chance, that 5% chance, that you can acquire the property, and that you essentially acquire the property for just the back taxes. So it usually ends up being about between 1 to 5% of the actual property's value. So if the property owner doesn't pay, then we can go ahead and start that foreclosure process. And so that lien gives that the lien holder the foreclosure right to take the foreclosure action and eventually own the property or take it to the foreclosure process.
Yeah, so that's part of the power of tax liens. When we talk about them being such an incredibly secure investment that can still earn a high rate of return, that is where the security lies. It's in the fact that the liens are placed against the entire property, and after that redemption period's over, the lien can actually be used to foreclose on that property. Now, most of the time, even after you start the foreclosure process, essentially what that does is it will prompt the owners of the property to pay off what they owe in delinquent taxes. That's what happens the majority of the time. But if they didn't pay it off, that lien still has the power to foreclose on the property, making you the new property owner. So you're either going to end up with a foreclosed on property, or you're going to get your check in the mail from the county for your initial investment plus the interest rate return that you've earned up to that point.
Yeah, and even though you're looking at a small percentage that actually get the property, there's certain strategies and things that you can do that help increase that chance if that's what your goal is. I mean, if you look at the tax deeds that go to auction, all of those tax deeds essentially didn't pay their property taxes for a period of time where it actually went through the foreclosure process. And so, even a state like Florida has a lot of tax deed certificate auctions. They also have tax deed auctions on a monthly basis. And so there is properties that will, not go through that process and that you can actually acquire.
Yeah. In fact, Steve just mentioned a state like Florida, which is kind of a unique state because they use tax deeds, but they also use tax liens. In fact, we'll show you on a map here in a minute just how they work. The second system in the property tax enforcement systems we have listed here out of those three are tax deeds. So we've got tax liens and we have tax deeds. Now, about 1/3 of the states, roughly, oh, there's a question there. Sorry, we'll be checking those here. So out of those three systems, we've got tax deeds. That's the second system that's involved. And let's see if we can explain exactly how tax deeds work. We're also going to look over here.
And as we went through and we looked about how tax lien certificates worked and how the county essentially, how the property owner pays the property tax. With the tax deed state, they don't sell tax lien certificates on an annual basis, so they don't sell tax liens. What the county does is they wait until the end of the redemption period of the time frame, and then they actually foreclose on the property. So the system is very much the same, except for they're not going to sell tax lien certificates. The county essentially buys the tax lien or holds that debt, and they're still earning a penalty, and then if they don't pay within that time frame, then they go ahead and foreclose. And so, tax deed states, they use deeds. Tax deeds give counties the power to foreclose on delinquent property after that redemption period is expired. So a tax deed state will still have a redemption period, but it won't really be important to us until it comes up for auction, until that redemption period is passed and the property comes up for sale.
Yeah. Now, what's unique about tax deeds is that you're talking about buying the property outright. Okay, this is an auction sale. It's like attending any other foreclosure sale. You are the, you're bidding on the property as a whole. Oh, by the way, there's a question here from Tony I can see. It says, when you foreclose, I think this is referring to liens because I didn't see this question for a minute. It said, when you foreclose, will you only get the amount that is due to you or the property? So actually, that's an interesting question. In other words, when you foreclose, will you only get that amount that's owed to you, or do you actually get the whole property?
It kind of depends on the state. For example, a state like Arizona, you go to foreclose, you own the property. A state like Florida, because it's very unique, where they have the tax lien system and the tax deed system, that you can acquire the property, but it's going to go to a deed sale first. And so in most states, if you foreclose on the tax lien certificate, then you will get the property. If the property owner does pay you before the foreclosure is over, the property owner not only has to pay you back the tax lien certificate, your interest, but they'll also have to pay for any type of legal fees or the foreclosure fees that you've put into it as well. And so, your money's protected either by the property itself or through getting paid back plus your interest rate return.
Yeah. Now, when it comes to tax deeds, the county, again, only has one objective here, and that is to collect what's owed to them in delinquent taxes. So when they hold a tax deed sale, one of the things they're going to do is they are going to sell all of these properties, and the opening bid on these properties will be the total amount that's owed in delinquent taxes plus penalties and fees. Now, if you consider that in most states, you're looking at probably between 2 to 5 years to foreclose on the property in most tax deed states, we'll say. Now, during that time period, like Steve said, the county's just basically hanging on to those properties and waiting out that period. But when they do offer it, what you're looking at would be the total combined amount of 4 years worth of taxes, let's say, and penalties and fees. Now, if we have time here later, we'll talk about how your property taxes, how they come to the exact percentage that they come to. But what's important to know here is that the opening bid amount will typically be a fraction of what the property is worth. And the reason for that is because the county, they want to collect the money that's owed to them, but they can't collect a penny more than that. So once they collect that amount, they've fulfilled their obligation with it. What this does is it gives you the ability as an investor to purchase properties for way lower than you can get them from most foreclosure sales, like a bank foreclosure. Because even at a bank foreclosure sale, the bank still owns the property, and any money that the lower they sell that property for, the more money they're losing. And so that typically limits how much money you can save with one of those because you still have the bank that's involved. With a county tax sale, the county doesn't have the personal interest in the property. All they want to do is collect that minimum bid amount. And so, you can generally find a lot lower prices with tax deeds than you can with the standard, with the standard bank foreclosure.
Yeah, I mean, with the tax deed, you're usually going to see an opening bid amount of around 5 to 10%, and you can buy tax deed properties anywhere from 5 to 50%. And so, when you're looking at a tax deed investment, you're really looking at like a real estate investment. That's what I love, and both of us love about tax sale investing, is that with tax lien certificates, there's a better investment strategy as far as earning interest rate returns. So better than 99.9% of your stocks or anything like that. You're earning a higher interest rate return, and it's backed by real estate. But then with tax deed investing, it's really foreclosure, it's real estate investing. So you're acquiring properties for cheaper than you can really any other method. Been involved in real estate really since we were in our early 20s, and have never seen a better strategy for acquiring real estate at a better price.
Yeah. In fact, we're talking about the ability to buy homes for $5,000 or $10,000. That's real. That's real, and it works. That's something that happens consistently. We'll see if we can show you some examples here in a bit. But if you're interested in property, tax deeds are certainly the way to go, but not everybody is interested in property. Some people are looking for interest rate returns. Now, here's another good question here. What happens if the property has a mortgage? Using the example on this screen right now. That's actually a really good question.
Yeah, exactly. In fact, you know, over the last 6 months to a year, you know, we've been doing some tax deed investing in Florida. And when it comes to the foreclosure, when it comes to any type of lien against the property, that tax deed foreclosure process eliminates any mortgage. It's going to eliminate any of those other type of liens or encumbrances against the property. So when you buy that property, you're essentially buying it free and clear. Now, you're buying as a tax deed, you're getting a quiet title, and that's really a whole nother webinar or training about how that process works. But you're essentially getting that property free and clear. There's not going to be a mortgage because the mortgage company has an interest in that property. And so anyone that has an interest, like a mortgage, a second mortgage, another lien holder, another owner, anything like that, when they go to foreclose on the property, they're going to let the owner or anyone who has interest in that property know that the foreclosure is taking place. And that mortgage company has just the same responsibility as the property owner to pay it off. If they don't pay it off within that time frame, then the mortgage company will lose the property. In fact, we've seen lots of properties that have been purchased that did have past mortgages, and that's maybe because the mortgage was sold from one company to another company to another company, and they didn't update their records. Well, that's not the county's fault, that's the mortgage company's fault. And so if they didn't update that information, or if they didn't take action, then they would go ahead and lose their property and lose their interest in the property as well.
Yeah. So really, you know, we hope that makes sense here. You know, with the mortgage, I would say that the majority of the time, if there's a mortgage company that's involved, so if the property has a mortgage on it, the majority of the time, that mortgage company obviously wants to protect their investment. And so they may not know that the property owner isn't paying their taxes, and they wouldn't necessarily know about that until they received a foreclosure notice, you know, in the mail, which would come to them because they're listed on the deed to the property. Most of the time, they'll step forward, pay off that amount, and the lien will be, well, essentially, the lien will be removed from the property. The investor's paid off. But like Steve mentioned, if for some reason they didn't pay it off because, let's say they didn't get that foreclosure notice, or they happen to look over it, or for whatever reason, it doesn't really matter. If they don't pay off the amount by the set date, the property will still be foreclosed on. Now, what's interesting about that is that they still have a loan between the borrower and themselves. In other words, this individual still borrowed X number of dollars from them for this property, but they no longer have the property as collateral. You know, that's what really happens when you foreclose on a lien, even if there is something there. So it's the power of tax liens. You know, that lien has the ability to foreclose on that property. And when Steve said it was a first position lien, that's what we mean by saying it takes priority or precedence over any other type of lien or claim, even a mortgage.
And the third system is redemption deed systems. And we talked a little bit about this at the beginning, and it was really the term redemption deed. It's used quite frequently in the tax sale industry or training today, but that was really a term that me and Shade came up with 10 or 12 years ago to describe a certain type of tax sale, and that's a redemption deed. And a good example of a redemption deed state is a state like Texas. A redemption deed is a state that uses, or redemption deeds give investors property rights like a tax deed. So, in example, in Texas, somebody that purchased the deed can live in the property, could rent the property out. They just can't sell the property because there's still a redemption period attached to the property. So it's like a tax lien where it has a redemption period, a time frame that the property owner can pay it back, but it's like a tax deed in not only the buying method, meaning that you're bidding up the price of the property. If there's $10,000 worth of delinquent taxes, we'll be bidding that up 11, 12, 13, and let's say the high bidder's 15. It's bid up the same way as a tax deed. You have much or most of the same rights as you would as a tax deed, but there's still that redemption period. Now that redemption period is gives the property owner a penalty rate versus an interest rate return. So if somebody purchases a they go to the auction this month in Texas, they purchase a property, and the property owner pays them back 2 days later, they're going to get that full 25% penalty for that year, regardless of when it redeems. So that's the difference between a tax lien or a interest rate, tax lien rate, and a penalty rate. Is an interest rate, you know, if it's an 18% interest, it's going to be broken up over 12 months. So you're earning 1.5% or 2% per month or whatever. With a redemption deed, that penalty is the same amount regardless of when it's redeemed. So if it's redeemed at 1 day or if it's redeemed at 1 year, it's going to be that same 25% or 20% depending on what state you're looking at.
Yeah, it's just a flat penalty rate, and that's part of what attracts people to places like Texas. You know, Texas is a popular state for people that are interested in redemption deeds. They are a unique investment, though, just because they offer you both ends. You know, you have the ability to take control of the property, but you know, you also have the chance there to simply get a check, you know, in the mail for the initial amount that you invested, plus a flat penalty rate like 25% or 50% in the second year, which is impressive.
Yeah, and with redemption deeds, you're going to have a lot better chance of actually keeping the property. You know, with the tax lien certificate, we say maybe 5% of the time you'll get a chance to get a property. With redemption deeds, it's probably more like 60 or 70%. You're going to be more often than not to get the property because the property owner is going to have to pay back a 25% penalty, but they're also going to have to pay back that increase. So if the opening bid started at $10,000 and you ended up bidding 20, the property owner would have to pay back 20 plus the penalty. So you know, it's less likely that the homeowner or the property owner is going to be able to redeem that property versus the tax lien state. So you have a lot better chance of actually keeping a property in a redemption deed state.
Yeah. Now, you know, over the last 15 or 20 minutes or so, we've discussed those 3 property tax enforcement systems that are used throughout the United States. Basically, every state is going to use one of those systems, and some states use 2 of them. So you can imagine just how confusing, you know, it can be. I think if you were looking at Tactile investing and trying to find anything that's uniform about, you know, trying to learn and go from one state to the next, because you could learn one, you know, how to invest in one state, but it may not necessarily tell you anything about how the state next to it operates. So it's very much a state-specific investment. Now, once you have decided, you know, if you want to invest in tax liens and deeds and you understand how they all work, you know, the next step there is to select an investment strategy. It's to get a really solid idea of exactly what it is you're trying to purchase. And that's part of what we help people do, is identify exactly how they're going to invest.
Yeah, and there's really two things that you're looking for, 2 things that you can achieve. First is property acquisition, acquiring property, usually through tax deeds, redemption deeds, possibly tax lien certificates. And then the other option is to earn high interest rate returns, primarily through tax liens or possibly redemption deeds. And so, you know, either you're looking to acquire property for 10 to 50% of its value, or you're looking to get returns of 10 to 24%. Those are really your 2 options with Tactile investing. And so once you've decided, okay, I'm looking to learn interest rate returns, well, there's going to be states and methods and buying systems to be able to do that. If you decide, okay, I want to acquire property, well, there's going to be the same strategies for going through that method as well, or using methods to purchase property.
You know, I love this slide because it simplifies the investment quite a bit. You know, it breaks it down into the most basic form, and that is deciding which it is that you want most. You know, are you more interested in trying to buy property, you know, at a fraction of what it's worth, or are you more interested in earning a high interest rate return on a safe investment? You know, once you know which of those you're most interested in, it will determine, you know, what the next step should be. So when we're talking about acquiring property for a fraction of what it's worth, you know, I would say that on average we've seen properties that you can pick up for as low as about 10% of its value. Okay, that's usually about what the opening bid is on a lot of tax deeds. It's roughly 10% of what the property is estimated to be worth. and it can go up from there. But it gives you the ability to buy those at a deeply discounted rate, ranging from 10 to 50% off. Okay, so if you can imagine most real estate strategies, you can never find property for that kind of a price. Tax deeds enable you to do that because they're unique and because they're tax deeds, which I'm not sure we'll have time to talk about the deeds today or not. On the other end of it, though, are the tax liens, and I don't think that it can be overstated here what an amazing investment tax liens are for those that are just looking to build wealth. If you've worked with the stock market before, then you probably understand that earning 10% on your money annually is not an easy thing to do. In fact, if you've had any financial advisors that you've worked with here recently, chances are your investments with them, whether it's a 401k or whether it's different retirement funds, haven't performed that well. There are some stocks that can do tremendously well, but as a whole, I think, and on average, you're not going to see that kind of performance. To earn an interest rate return annually of 10% or more is really almost unheard of anywhere else. And if you find them, they're generally investments that are fraught with risk. Because the higher that return goes, the greater that risk becomes. Tax liens are a little bit different in that the risk doesn't go up. The lien is always backed by property, and so really it will always give you that ability to earn those returns. If the people want to keep their property, they have to pay off their delinquent taxes, and in order to do that, they're going to pay the county, which means you're going to get a check in the mail.
Yeah, exactly. And in addition with that, with tax lien certificates, you can really start at any level. That's something I love about it as well. I mean, I've helped investors. I mean, Shade's first tax lien was what, $69, $67?
Yeah.
My first tax lien was $120. I've helped students over the last year that only had $300 or $400, but were able to go to Florida and purchase tax lien certificates on good, valuable building lots, and they're making an 18% return, and that $500 is backed by $25,000 or $30,000 worth of real estate. And so it doesn't matter if you have $500 or $500,000. There's tax lien certificates out there that you can purchase and start earning a great interest rate return that's going to be backed by real estate. And so it doesn't really matter where you're getting started. You don't need millions of dollars. It can just really be something to start with as a way to start building wealth, as a really like a savings account if you're just getting started, or if you have retirement funds, then putting those retirement funds into a self-directed account, investing in tax lien certificates can earn you a better interest rate return than almost anything out there.
Yeah, in fact, the last thing that you want to do is have your money just sitting in a bank account and not earning any money. And because the reason for that is just by inflation alone, you're losing money, every single year. In fact, inflation could be as high as 3 to 4%, I would guess. If you were just trying to play it safe, it might be a little bit lower than that. But the main point here is that you have to invest in order to keep that money, because not investing simply means you're going to lose it. So, actually, let's see here, another good question here. Now, here, this is actually an excellent question. What happens to the surplus money after a property deed was purchased over the amount of the back tax amount? So this is an excellent question. Basically, what you're asking here is if a property comes up for a tax deed sale and it opens up at $10,000, that's how much the bidding is, and let's say that it gets bid up to $40,000, what happens with that $30,000 difference, between?
Yeah, it's called an overbid, and so that's going to be the amount that's left over. Now, that leftover amount, let's say it's starts at $10,000 and sells for $20,000. That extra $10,000, that is going back to the property owner. So any excess amount, the county can't keep that, because that would make that the county's making a profit, and they can't make a profit on it. They just need to make back their money. So that additional amount is called an overbid or an overage, and that amount is owed to the property owner. In fact, there's investment strategies, or I guess business strategy out there, where people will contact these property owners that have this excess funds or this excess money available, and will essentially help them be able to get that money and then get a finder's fee for it. And so we've actually going to be adding these things called overage list or overbid list on our website, where essentially you can go and these are going to be that amount that's left over. So really that's what I guess the short answer is. It goes back to the property owner.
Yeah, it certainly should. What's interesting about that is the counties. I've always found it weird, that money is just sitting there. The counties don't do anything about it, but there are lots of cases where people will have huge sums of money just sitting on the books.
$40,000, $50,000, $100,000. I mean, if you have a big tax deed sale where a property goes, where I've seen them go up for $500,000, and it started at $100,000, there's essentially $400,000 out there that's owed to the property owner. And so there is a strategy within Tactile investing of getting that money to the property owner and essentially, getting a small fee for it or getting a finder's fee or a cut.
Yeah, essentially kind of helping investors. There's actually another question here, which is a good question here, and it's just about what kind of income this stuff is classified as in terms of when you're doing these investments. And I think it would all count as investment income. The way that you earn income, though, with the two investments will be quite different. With tax liens, it is a consistent process of liens redeeming at different points and then reinvesting. So, if you were to buy, let's say you were to buy 10 liens right now, they would all redeem at different points. Some of them might redeem immediately, tomorrow, and some of them might redeem deep into the redemption period or right before foreclosure. With tax liens, it's usually receiving that check in the mail and reinvesting those funds, but it's the interest rate that that you're essentially earning. With tax deeds, it's closer to capital gains because you are purchasing the property for a set amount, and you basically have the option at that point to either keep the property or to turn around and sell it for a profit. So if you were to turn around and sell that property for a profit, then you would be taxed on that. Just like you would other earned income. But if you treat it like a long-term investment, then it wouldn't have the same tax requirements. In other words, what many people do is right now the need for housing is immense. It's getting harder and harder for people to qualify to purchase homes. And as that continues to happen, I don't see it getting easier in the future. But as that continues to happen, the need for rental housing, will only increase. So for a lot of tax deed investors, their objective is to purchase the property and to get somebody living in it, to get it rented out, because that's something that they can do almost immediately, and it generates monthly income right away.
Yeah, exactly. And so it's just going to depend on how they set up their business, if they're investing on their own, if they're investing through a business, if they're investing in liens or deeds, if they're selling the property, if they're renting the property out. Really, with tax lien investing, you can start investing your first tax liens in just your own name. But as your business starts to grow, then you'd look at setting it up through different business structures. But even in the scenario or the case with me in Florida on the homes that we're doing in Florida, those homes we're picking up and essentially fixing up and using as rental properties. And the reason is because even if we end up having to pay a little bit more in Florida than we normally want to on a property, versus where we're here in Utah, the investments in Utah, you can make such a better dollar on those properties in Florida. And so even if you buy a property for only 50% of its value, you buy a property that's worth 60 and you maybe pay 25 and put 5 into fixing it up. So you've got it for 50% of its value. That rental property is now making $800, $900 a month. So for $30,000 investment, now you're making a monthly income of $800, $900 a month.
Yeah, in fact, it is. I think the fastest way right now to create income is through properties like this, and purchasing them as tax deeds. There's actually another good question here. Which, by the way, we love getting the questions here. They're awesome. So this question is students saying, I need a home to live in now. So how do I purchase over-the-counter tax deeds? In Texas, they don't have a clue what I'm asking for, which doesn't surprise me. A lot of times when you talk to the county, they're not necessarily always. Sometimes they're very helpful and they'll know exactly what you're talking about, and sometimes they'll have no idea. It's hard to get information sometimes from them that really explains what you're looking at.
And one thing you're looking at in Texas is the terminology. So in Texas, if you're asking for over-the-counter, they're not going to know what that is. But if you ask for struck off, they're going to have a better chance of knowing what that is because they use different terminology. And so in our state profile guides that are in our membership course, we'll go through and talk about what taxing authority is essentially using it and what terminology they would use. And so in Texas, they have what's called struck off properties. And so if the property isn't sold at the auction, they put together struck off lists that you can get through several different websites there through Texas. They have these struck off lists, and so we'll have the struck off lists on the website as well. But that would be something to look at is to start looking through the struck off list, and then also paying attention to what properties are coming up for auction. That's one thing that's awesome about Texas, Georgia, Florida. Even though Florida is different, is that they have these deed auctions or redemption deed auctions in Florida and Georgia every single month. So every single month there's going to be new opportunities. Maybe some month there may be property that bid up higher than you want to pay. Other month there may be less competition. And so if I was looking for a property in my own area, then that's probably what I would see, what's available through the struck off, and then also pay attention to the monthly auctions.
It'd be kind of neat though to live in Texas and to be able to Texas is a pretty good state overall. Not all states are the same, with taxable investing. Like Steve mentioned, the difference in profitability, and Texas is a great state. Some of the states have laws written that are more beneficial to investors, and others have laws that are written that seem to benefit the homeowner more. And so it's a matter of figuring out, which places are going to work. There are some states that have laws written that pretty well discourage investors from investing in there at all. By requiring, a set amount, a percentage when they go to sell a property, requiring them to get up to a certain percentage or something like that. We like to stick with the states where, they keep it simple and that make it easy for investors, to earn a lot. It's a really good question right here that came in from another student here. Michael just sent this in. What are the most important due diligence items to cover when buying tax liens over the counter, and the best resources for the data? That's actually a really good question.
It's really a training in its own.
One thing that's interesting about liens, I guess you could say, is that you don't have to go through the same level of due diligence for most tax liens. And that's because of the nature of how they work and the fact that the majority of them redeem. Meaning that if you were going to buy a home, obviously you've got to do a ton of due diligence on it because you want to make sure that you aren't making any mistakes. But when it comes to buying liens, you don't have quite that same requirement of information.
Yeah, and to give you a couple of bullet points, I guess, to think about or to answer that question, when you're looking at purchasing tax lien certificates over the counter or any type of tax lien, the first thing you're going to look at is the lien cost to the value of the property. So the lien to value ratio. What is the value of the lien? How much is the tax lien? Let's say it's $500. How much is the value of the property? Let's say it's worth $50,000. What is that lien to value ratio? The second thing you'd look at is to see how many additional tax liens are on that property. For example, when we're looking at cheaper tax liens on building lots in Florida, you can find a tax lien on, you can find two different properties. One has one tax lien on it, and one of them has 7 tax liens on it. Now, if you purchase that one with one tax lien on it, when you go to foreclose, you're only going to have to pay off that one tax lien. If you go to purchase the one with 7 tax liens on it, or 6 tax liens, or whatever, you go to foreclose, you're going to have to pay off all of those other taxes. And so if you look at the actual amount of the lien and then any additional liens to figure out how much the total cost would be to foreclose. And then if that has a good, cost to value ratio, then you go ahead and invest in it. So those would be the two things that I would look for. First is that value of the value of the property versus the lien, and then also how many other additional liens are on the property.
Yeah.
If you can kind of stick to properties that fit good parameters around those two things, you're usually going to purchase a pretty good tax lien certificate. It doesn't matter if it's on a single family home, if it's on a building lot, if it's on commercial lot. You know, I think land is a great thing to look at over-the-counter tax liens if you're looking at it from an investment standpoint.
Yeah, absolutely. In fact, tons of land. There's so many land opportunities there, and also, you know, there are some home opportunities. You know, we're using terms that maybe not everybody's familiar with. You know, one of the terms we're using is over-the-counter. If you're not familiar with what that is, over-the-counter is the term that we use to describe tax liens that are available for sale after the auction has taken place. So these are tax liens that didn't sell at the auction for whatever reason. That can range from everything from, let's say, a sale falling through, somebody not paying somehow, or maybe there's just not enough investors at the auction in order to bid on everything, or maybe the property's got something wrong with it and nobody's interested in it for that reason. Whatever reason it is, if there are tax liens that are left over after the sale, in many states, the county will continue to offer those over the counter. Now, over-the-counter investing has a couple of advantages over buying tax liens at a live auction or at an online auction. And one of those benefits is that you automatically earn the maximum interest rate return. So if you're buying them over the counter, you don't have to compete with anybody in order to purchase them. So you earn the maximum interest rate return that you can get.
Yeah, we don't have time this evening to go through all the bidding methods, but each state's going to have a different bidding method. And so if we're looking here underneath these tax lien investment strategies, we see there's four strategies: online auctions, live auctions, over the counter. So with a live auction or an online auction, there's going to be different bidding methods. One of them is called bid down the interest rates, the most common for tax lien certificates. So you start at 18% in Florida, and me and Shade are bidding back and forth, and he accepts 17.75 and I accept 17.50, and we bid it down to whoever's willing to accept the lowest interest rate. When you're looking at over the counter, you're purchasing that tax lien certificate for that highest interest rate return after the auction. So you may have to filter through and find those good properties amongst the junk, but there's going to be good tax lien certificates. I've seen as good a tax lien certificates as you can purchase on over-the-counter lists.
Yeah. In fact, just one more point here, just about tax liens and the type of due diligence that you should do with tax liens. The primary thing I think that you're looking for when you are buying tax liens is to purchase tax liens that are placed against property that has significant value, meaning that somebody has to want it. As long as somebody wants it, your investment is secure, and the more somebody wants it, the more secure it is. So you could pretty well go by this rule of thumb. If you're looking at tax liens that are placed against homes in general, all of those are going to be high levels of security, because nobody wants to lose, nobody wants to lose their money or their investment. Nobody wants to lose their home because they didn't pay their property taxes. So, when you're looking for liens, that's one of the ways you can do it. On the flip side of that, if we were to look at it and say what exactly is an undesirable lien, it would be property that doesn't have considerable value, or that doesn't, significant value. You could say property that doesn't have any real use, that maybe somebody doesn't care about. So you'll notice a lot of times, in fact, you probably notice this at your own house. Maybe you have property, small pieces of property that nobody seems to own. And maybe they're leftovers from the way that the place was subdivided. If you get a small piece of property like that, and let's say it's not big enough to put anything on it, let's say it's a drainage ditch or something like that, those types of liens are the ones you want to avoid. And the reason for that is because there isn't a property owner there that that will have the desire to pay off their taxes to keep that piece of property. So the problem with buying a lien against one of those properties is if the redemption period ends, you can go and foreclose on the property, but what's the point of foreclosing on a property if it's not worth anything and if you can't sell it? So that's one of the main things that you look for.
Yeah, have value and use. Those are really the two things that you're looking for. Make sure the property has value. Make sure it has use. An example would be for a property that doesn't have any value or doesn't have any use. Back in the 70s in Arizona and some of the like more rural counties like Navajo County and places like that, they put in these subdivisions or these building lots. Now they really don't have any roads. They're just essentially 1 acre parcels or 2 acre parcels out in the middle of nowhere with nothing but rattlesnakes and sagebrush. In an area like that, those properties have a value of $500 or $1,000 and may have, 10 or 20 years worth of tax liens on it that equal the same amount. And that type of tax lien, that's not going to be a good investment. Your money's not secure. And so, in looking, making sure that the property has value, that it has use, and then the cost of the lien to the value of the property. If you do those three things, you're usually going to be making a pretty good investment.
I just had a thought as we're talking about tax liens. If you're looking for the easiest way to get involved with tax liens, to be able to buy tax liens, earn a high interest rate return, and have the same security with tax liens, but let's say that you don't necessarily have the time to do it, the secondary market is the answer for you. The secondary market is something that's pretty new. We didn't have it. I don't know that it even existed, 10 years ago.
Yeah, well, not on our scale, just not on an individual investor scale, more of just investment firms and things like that. And really, what the secondary market is these are tax liens that were purchased by large banks and financial institutions. Probably 50% of the tax liens in the country are purchased by Wells Fargo. Large, huge banks and hedge funds. And so essentially what the secondary market is purchasing portfolios of tax liens from these large banks and financial institutions that buy them, and these tax liens are at the end or past their redemption period. So these are tax liens that have gone through up to the redemption period and haven't foreclosed on yet, and essentially you're buying these tax lien certificates so that you can start the foreclosure process immediately. And so what it allows an investor to do is, 95% of the time you're just going to make your money back. It allows an investor to essentially turn over those secondary portfolios in a 6-month to a year basis and then essentially reinvest time and time again. And the way that we were able to do this was pretty unique. We tried to work in the past with a couple of different companies out there that offer secondary liens to our students, and we realized that really the best way is to work directly with the student and together with the portfolio manager to go out and actually purchase portfolios directly with the student. And so it's really really we need to create a whole webinar on how our secondary market system or our secondary tax lien buying system works. But it's a unique strategy to Tactile Support and Tactile Solutions, and I think it's going to be a pretty good investment method for investors that fit the parameters of the secondary market.
Yeah, in fact, I think it's ideal for a lot of people. I mean, if you're looking for double-digit returns, you can earn those returns, with tax lien through the secondary market. And the idea is, when you meet with your portfolio manager, you basically say, okay, here's how much I want to spend. Let's say you say, okay, I'd like to buy $20,000, in tax liens or a portfolio like that. The portfolio manager will then go over their inventory and choose, the liens that will work best. So in other words, the portfolio manager is doing a lot of the due diligence for you, and they will then present that information to you and say, okay, here's what we have, here's what's in the portfolio, and you simply buy it. You don't have to actually go through that whole process of attending different auctions or sales. It's a much faster, more streamlined way to invest.
Yeah, exactly. And so, it really kind of depends on where you're starting and what strategy or buying method is going to work best for you.
Hey, there's Heidi. Hey, Heidi, how are you doing? We're just noticing different people here that are joining us here, past students. It's great to see everybody on here. Really, it's been so long. It's been so nice to get back to this again. A couple other questions we have here. I can see here that Thomas asked here, in Arkansas, I see a list that have a column that says interested parties with several persons listed.
That would be because Arkansas has a little bit unique over-the-counter system, and so you'll submit a bid into one of those properties. It probably has to do with an over-the-counter list, and so somebody had, when it says interested parties, that means that somebody has submitted an offer on that property, and so that offer hasn't been accepted yet, or they're in the process of accepting it or denying it or whatever that is. That's usually what that means.
Yeah, in fact, that's probably related to the next question the person had too. You know, do those persons lose out on the property if I buy it over the counter? And it's related to how you buy it, I guess, over the counter. You know, so
Yeah, or if they have a mail and bid system, or just depending on how it's done.
okay, so let's see here. Okay, so let's see. What's the difference between tax lien sales versus judgments? You know, I think that
A tax lien sale it's trying to think how to explain it. Essentially, they're a lot different. With a tax lien, that's a judgment could be a lien, but it could be a lien against the person. It could be a lien against other things. When you're talking about a tax lien certificate, that's the lien against the property itself, just for the property taxes. And so a judgment could be many different types of liens or other type of things put against you, some type of legal encumbrance put against you. With a tax lien certificate, it's just has to do with property taxes in the county government, and the lien essentially has the foreclosure rights. So your regular judgment wouldn't have any kind of foreclosure rights the way a tax lien certificate would.
yeah. In fact, another thing too is that a judgment would require like a court order, and with a tax lien, it's just relying on the state laws. So there isn't any kind of a judgment like that. They just state laws enable them to place that lien against the property. So that's probably the primary difference here. Now here's another good question here. Can you perform most due diligence, online for over-the-counter liens? Any examples such as best online photo site like Google Maps, Satellite View, or is it a better resource? It's actually another really good question, and it's something that has changed just dramatically over the last 15 years. When it's kind of funny when we started when we started attending auctions, in order to invest in liens, the only way you could really do it was to be there in person at the county records building. Because first off, you had to be there if you wanted to attend most of the sales. But if you even wanted just to try to do any kind of due diligence on the property, you pretty well had to use their records, because that was the only way you could figure out that detailed information. But now we have some of the resources, like you mentioned there, that give us the ability to perform a lot of online due diligence. So we do have things like your mapping, like Google Maps. The Google Maps program is pretty amazing. If you're using that, because it gives you the ability to view, get a satellite view of properties, both overhead and a street view on a lot of properties, which can tell you a tremendous amount about the property. Maybe not necessarily enough to make a decision for buying a tax deed on. In other words, you want to still verify things about the property, but we can do things now with due diligence that we just couldn't do a few years ago.
Yeah, I mean, for 99% of your tax certificates, if it's over the counter or if it's online, in my own experience and our experience helping investors for the last decade, really you can do that online now. So if you're doing tax deed investing, if you're acquiring homes or things like that, then we recommend seeing it in person. If you're doing deed investing, or having somebody view the property itself. For example, I'm here in Florida, cousin in Florida that can go do and take pictures and send them to me, send them to us to determine. With a tax lien certificate, just like Shade mentioned, between the county records, the county maps, Google Maps, Zillow, property value websites, those type of services that are out there, you can really determine if it's a good tax lien certificate just from that research without actually having to see the property.
Yeah, in fact, one thing that's interesting about tax liens, a lot of the liens that Steve and I have bought, we didn't actually even have the ability to do due diligence on beforehand. So in other words, imagine the county is selling some liens and they come up with a lien and suddenly they come to your name and ask you if you want to buy it. That's how it works in some of the bidding systems with smaller counties, where they use a rotational bidding system, and it makes it difficult to try to study it. But because of the way that liens work, you don't necessarily have to know the same information you would for the deed, because you're not buying the property. You're just buying this lien against the property. So it doesn't have to meet the same requirements. As long as that property has significant value, that lien is safe. In other words, if you've got a $500 lien and the property is worth, $20,000 or $50,000, whatever it is, then you know immediately that you've got a high level of security with that investment, because people are not going to want to lose that piece of property. And the more usable that property is, the higher that goes up. So if it's something that people can live in, like a home, that just increases the chances that they'll never let it go to foreclosure. If it's not just a home, but a very nice home, that just increases the chances. The more valuable the property is, the more likely it is that it will redeem. So with liens, it goes to say that the better the liens are that you purchase, or at least the more higher quality of the properties, the liens you purchase, the safer the overall investment.
Yeah, absolutely. So those would be the 4 primary buying methods for tax lien investment strategies. As far as tax deed strategies, really going to have the same 3. Online auctions, there's tax deed auctions. Right now, Michigan has online auctions. Florida, California, there's quite a few online auctions, a lot of buying opportunities for tax deed investors. Live auctions as well, that's going to be the primary method, especially if you live in a tax deed state, attending those local auctions. And then, of course, over-the-counter as well. They do sell over-the-counter tax deeds, and we have all of those tax deeds on our membership page as well. So when it comes to tax deed strategies, it's going to be pretty much the same strategy. So once you determine if you're looking for property ownership, if you're looking for interest rates, then you can go through and review, okay, tax lien strategies or tax deed strategies, and then what strategy do I want to pursue? I don't live in an area that has tax deeds, but I want to buy tax deeds, so I'm going to participate in online auctions, or I'm going to look at over the counter, or whatever it is that your particular strategy is.
Yeah. Now, some other questions that we have here. This question from Tony is, do you have to buy liens from your state only? And if not, how do you research the out-of-state property? How do you make sure that the property, is not falling apart, etc.? The answer to that is, first off, you can absolutely, you can buy liens from outside of your home state. You can buy liens anywhere in the country. The only thing that's required in order to buy liens or tax deeds is to be able to show up, have the available capital, and to provide either your social security number or tax ID number to the county when you go to do that, so that they can track the earnings. Outside of that, they'll let you invest anywhere. With the internet now, you can do a lot of research. So if the county produces a list, most counties now have their records online, meaning that you can look up detailed information about the property, not just the address, but you can look up detailed information about the history of the property tax payments if you want. You have so many things you can do now, to ensure that it's a good investment. But with tax liens, again, if it's a tax lien, when I go to buy a tax lien on a property, my thought isn't necessarily, how do I make sure that this property is not falling apart, or that it's nice or something. I'm not really worried about that. If I was buying the home, then I would definitely be worried about that. But since I'm only buying the lien, the only thing I'm really concerned about when I buy that lien is that that it's placed against a property that has significant value. So if the property that it's placed against has a lot of value, then that's the only requirement that I really have in order to purchase that lien. And that's because if I know that it's placed against a valuable piece of property, I know the lien itself is secured. I know that the vast majority of the time, 99% of the time, it will simply redeem, just like most liens do. And that's how you're going to pick out the best ones. The only way you can really make a mistake with liens is if you're trying to buy, I guess, all of the cheap liens, maybe. Like if you're just buying like the lowest dollar liens you could find, then some of those might not end up redeeming. And the reason for that is because it's like we were talking about with the extra pieces of property. If you get a small piece of property that's left over and that nobody cares about, nobody wants it, has no use, then there's nobody there to pay the delinquent property taxes on it, and there's no reason, there's no reason to foreclose on it to own it.
Yeah. It really comes down to just those two requirements: the property have value and the property have use. When helping somebody purchase cheaper tax lien certificates in Florida, we could be looking at two tax liens. One, they're both $200. One's on a $15,000 building lot that has homes on, in that neighborhood, and the other one happens to be on a drainage ditch or some unusable property. They're both $200 tax liens, but one of them has value and one of them doesn't. Even if they were both worth $15,000, but one of them was a building lot and the other one was a drainage ditch, even if it had a high value for whatever reason, if it didn't have use, you can't use a drainage ditch. And so as long as the property has value and has use, you're usually going to be pretty good.
Another great question. There have been so many good questions here. This one's related to the secondary market. How much funding is required for the secondary market?
Really, with the secondary market, it does take more funds than it does through traditional tax lien investing. So with the secondary market, what we're essentially doing is somebody's going out and we're helping them purchase a portfolio of tax lien certificates from one of these banks and hedge funds. And so to purchase a portfolio, they're usually going to start around $5,000. And so for investors that are less than that, what would usually recommend is getting started with over-the-counters or helping you get involved with some type of an online auction or a live auction. But that's usually where it would start. So between $5,000 and then really with these type of secondary liens and the relationships that we have, somebody with $1 million could go and purchase a portfolio of secondary liens. So that would kind of be the starting point. That's kind of the only really holdback is that you'll have to have about $5,000 to just get started.
Really, I wish we would have had this secondary market opportunity we have now. I wish we would have had the same connections and opportunities years ago that we have now, because there have been so many students over the years that have wanted to invest in liens, believed in liens, but just didn't have the time to do it. And that's really who this is designed for. The secondary market is ideal for the people that know it works. They just don't have the time to be able to do it.
Yeah, so. I mean, kind of how it works is you and your portfolio manager meet together, determine exactly what type of liens you're looking at, what type of interest rates, what your strategy is. And then going out to all of our different relationships with the banks and the hedge funds that have these secondary liens, looking through their inventory, putting together a portfolio, and then making an offer on that portfolio. Now, what makes our investment buying system, our secondary buying system, so unique is that the lien holder is actually going to be able to purchase these tax liens with already a couple of points ahead. So when we go and purchase a portfolio of tax liens, we get them at a slightly discounted rate, and then we're able to offer that discounted rate to the investor himself. So an investor can buy a portfolio of tax liens and already be up 3 or 4 or 5 points interest on the tax lien certificate portfolio before they even buy it. And then the portfolio manager will help them through the entire foreclosure process. So with these tax liens, really what the strategy is to start the foreclosure process quickly, because it's going to take about 6 months. And if we're doing them in Florida, which is a lot of the areas that we look at, the county handles the foreclosure. So getting the foreclosure, having the county handle it, 95% of those are going to be paid off within that first 6 months, and then you possibly get in a property as well, and you get a property, then you've just, instead of making 18%, you've made 100% or 200% or 300%. So it's a pretty good strategy. It's available to all of our members as far as the secondary market and working with one of these portfolio managers.
Excellent. Okay, so another question here is just related. He says, how much lead time do you have between the lien coming out of the auction block and doing your research? So in other words, how much do you know ahead of time what is coming up? I would say typically tax sale lists will come out maybe 3 to 4 weeks prior to the sale, and that can be with both tax liens and tax deeds. With tax liens, though, there, when you're, I guess let me back up here a little bit. When it comes to tax deeds, the county may produce a list of tax deeds 3 to 4 weeks before the sale, but something happens between the time they produce that and the day of the sale, and that is many of those end up redeeming. And it makes sense if you think about it. You have people that are about to lose their property to foreclosure, and they are paying it off to avoid having that happen. And so, you've got some lead time, but at the same time, they're going to be redeeming throughout that process. With liens, you don't really have that because people are not at risk of losing their property. So, between the time that the county releases the list to the time when they hold the sale, most of those liens will still be there and will be available. And in terms of the research that we would do on those liens,
it depends on how many liens you're purchasing, how much money you have to invest.
Yeah, a lot of it is probably like how much is the lien, what exactly are the liens against. A lot of the stuff we do online as well in terms of the due diligence, we can probably show in additional trainings as far as how we go through the process of pulling the information from a tax sale list and using that information on the county website to get the information we're looking for, how to pull up just property records through county websites and how to read the county property records.
Usually you're going to start, a couple of weeks before the auction.
Yeah. In fact, yeah.
With the tax deed auction, I'll look over the auction list maybe a month beforehand and kind of pick out some properties, but I won't really start the due diligence until the hard due diligence, the full due diligence until a week or two before the auction, because I don't want to spend time doing due diligence on properties that aren't going to be on the list. And Shade mentioned, on the tax lien list, you're not going to have as many, but you will still have some that just don't want a tax lien or just trying to pay it off or just didn't realize it. And so you'll still have some. So usually 2 or 3 weeks before the auction is a good time to start kind of narrowing down properties that you're interested in.
And also, we have Dan, looks like he came in, said he missed the first 45 minutes, wondering if there is a replay or something like that that'll be available later. And absolutely. I think I made the mistake of starting it like a couple minutes into it once we started, but it will be available here. We'll have that replay available here in just a bit, so you'll be able to see the first 45 minutes of that. You should also be able to download the PDF here on the slide we're going through on each one. So, one other question here: how much info am I given on the portfolio so that I can check them? So this is related to secondary tax liens. How much money am I given on the portfolio so that I can check on them before I invest? 10 to 20,000. What time frame do I have to decide what is presented to me?
Yeah, it's going to be completely dependent on the deal, but you'll be working hand in hand with Mark or one of our partners to essentially do that. So you're going to know exactly what properties you're essentially doing it together. The portfolio manager is doing the work and putting everything into place, and then giving you the information to go through and decide which liens you're interested in. So even before they put together a portfolio, they're going to know your parameters that you're looking for. Then they'll use those parameters to go find and create a portfolio that fits those parameters, and then go ahead and make an offer on that portfolio to the bank or to whoever has the portfolio. So we can put you in contact with Mark, our business partner. He can go ahead and get you started.
Also, part of what the portfolio manager is doing is trying to help you understand and see exactly what these liens are that they've come up with. So that's part of what they're going to want to show to you is exactly why the portfolio manager selected these liens versus others. I guess it's nice that you can get somebody else that will do a lot of that research necessary to select these liens, but they're still going to explain and show to you exactly why they chose those and why they're good investments. So it's not a high pressure thing where they just suddenly give it to you and say, all right, you've got to buy this right now. You'll have the time to check out the liens.
Yeah, this is completely exclusive to Tactile Solutions, and so it's unique. Been doing it for a couple of months now, and we're just really starting it now with Tactile Solutions as well. So it should be a real good opportunity, and the goal is to help an investor recoup those funds every 6 months to a year just to continue redoing it, over and over and over again. So, over a period of 5 years, your money isn't just earning 18% or 16% or whatever it is. You're acquiring properties through there. You're turning those. You're really creating a secondary market portfolio that's growing on a year-to-year basis.
Yeah. Now, another question related to secondary tax lien market is, is whether you're looking for, for the interest rate returns, or whether your result is to own properties, and which one you're looking for.
Either strategy can be employed. Usually, just the numbers say 95% of them are going to redeem. So, you have a higher chance of trying to get property through this strategy because they're already at their end of their redemption period. So essentially, you're starting the foreclosure process now, but you're still going to have a high percentage of those that go ahead and pay off. And then, of course, the ones that don't would be the ones that, be those tax deed properties that you could turn around.
Something else that's interesting about the secondary market is that let's say you have liens that that you will be foreclosing on. We actually have companies that will help you go through that process here of foreclosing on properties. Let's see here. Oh, perfect. Okay, so I'm just looking here. Now, this question right here is when will we do a webinar on the secondary market strategy? And we'll probably do that pretty soon. I think you're going to see a lot of training coming from us here in the next little bit. We should have, as far as like a live weekly training, I'm sure we'll do it soon. We can have training information.
Yeah, we've got to put together something on the whole strategy, and we'll probably bring Mark in as well. Mark was the one who created it, had the idea with us. We had worked together. Working with one of the other companies that was supposed to provide secondary liens for us, and we had this idea of having the investor and the portfolio manager do it together. And so, really giving that investor the opportunity to take advantage of buying secondary liens and getting that discount on the lien as well. And so, we're going to put together a webinar and an overview of how the entire strategy works, and then really it's just working one-on-one with Mark or one of us to start putting together the portfolio.
Yeah, absolutely. Yeah, you guys have been fantastic though. Lots of really good questions here. Okay, and this question right here is just related to assistance with acquiring properties on, with the ones you do start to foreclose on.
Yeah, the portfolio manager will help you through that whole process. So things are in place as far as foreclosing on the tax liens, then reinvesting into new portfolios. So, that whole entire process is done through the portfolio manager.
Yeah. In fact, the relationship that you have with your portfolio manager is a long-term relationship. In other words, they're not setting it up to do a one-time sell. The objective for the portfolio manager is to help you build, a growing portfolio, and so they want to have, they want to do return business with you, and also what that means is that they're going to do everything they can to help you through that process and to make sure you're successful, because they want you to reinvest and buy more liens. So, it really it works out well for the investors, and it saves you a ton of time versus trying to just attend auctions individually and invest. This is a much faster way of doing it. All right. Let's see here. I think there's a question actually earlier. Let me see if I can find that, because there was a question about the struck off properties here that I wanted to just check on here really quickly before I.
And if we didn't get a chance to answer all your questions, you can always send them to us in an email form, or we can answer them after. Sometimes we don't have the ability to answer every one of them.
Okay, so the question was, after the struck off stage and the property is back in the hands of the lender, how difficult is it to negotiate a price with the holder? When properties are struck off in Texas, that's the equivalent of them being over the counter, meaning that they've been offered at a tax sale. In fact, in some cases, they've been offered at multiple sales, but they didn't sell for whatever reason, and so they're still available. Normally, in terms of them being back in the hands of the lender,
they're really back in the hands of the county. The county's holding the deeds on those properties, and so the lender really doesn't have. If there's a mortgage on a property or something like that, they, you know, they really don't have anything to do with it other than paying the property taxes if they needed to. So that property is going to be really in the county inventory. The county's going to hold that deed to the property until they sell it in a struck-off sale, or they, sell it to an investor, and then at that point, the deed would be in the investor's name. So the county will hold that deed until the end of the redemption period, and then they would take full ownership to the property. But usually a struck-off property would get sold between then or end up getting redeemed.
Yeah. Now, in terms of negotiating a price, that's actually something you can do with some counties if they have old liens or old deeds. In other words, there's some counties that are willing to take bids on things if a person doesn't want to pay the full price. So if they've got over-the-counter liens that are available, you can offer, some counties you can make some kind of an offer. In most cases, they're going to, they want to collect at least the the amount that's owed in terms of the taxes and fees.
Yeah, so there's some states out there like Pennsylvania or places where they'll have a respiratory list, or essentially it's an over-the-counter list of properties that you can submit a bid of over $200. Now the county can reject that or accept it, but it gives you an opportunity to purchase in at a lower price point. But in Texas specifically, you're just going to be looking at the struck-off, which will be the back taxes.
Okay. Awesome. So just to recap what we've covered here so far, we talked about the three investment types that are available through tax sales, which are namely tax liens, tax deeds, and redemption deeds. And then we've talked briefly about some of the different investment methods that you can use in order to purchase these types of investments, which are online auctions, or the second one is live auctions. A live auction you attend in person. Third is over-the-counter. Then we have that fourth one listed here, secondary market for the liens, because it's available there, but deeds don't have anything like that. So, we've basically talked about some of the structure here on how the tax sale system works. We'll see if we have some time here to do, look at some different examples, and also to talk about some of the things that we've changed and some of what's new. We've, in addition to, well, I guess this relaunch is really about a lot of new things. We've got new websites, we've got new training opportunities, new things that are available that we didn't have before. And so we wanted to take just a minute to show you some of that, and then also, before we lose people too here, since it looks like we're coming up here, I think we'll keep everybody on. So let's just switch over. We can actually show everybody the website and talk about some of the things that are involved and they're included.
Essentially, we've been putting a lot of work into this. It's been a busy last couple of weeks, but we put together a new membership program for our students and a new website as well. The website is called tactilesupport.com. And so essentially what this membership is going to include is everything needed to help an investor become successful. We're going to have webinars. We have obviously the auction calendar. We have over-the-counter lists. And then we have a lot of unique tools that are going to be specifically for our members. And so membership is going to include a lot of things, including the secondary market. And so we'll actually get in and look at the website and
let me just see here.
Take a view of it.
Let me see if I can switch over here. Let's just switch over to show the full main screen. Okay, so let me just enlarge this a little bit so that you guys can see this just a little bit better here, and that we can show you. Now, we've got a couple of different things here that we can show you. First off, with tax sale support, there are pages that you can get to, that anybody can get to, and then there are pages that are password protected, so that you have to be a member to get into. This is basically where you would log in.
Yeah, so essentially, we're going to have several different sections. We have the Members Center, we have the Training Center, we have the List Center, and we have the Profile Center, and then we also have a Coaching Center as well. for the coaching students. And so membership is going to include a lot of different services. Each one of these centers are going to have specific tools in each one of them. And so, if we were to click on any one of them, click on Member Center or Training Center, we can look at some of the tools that are available. So in the Member Center, and we'll be adding a tutorial video as well, you can see some of the tools that we've established. First of all, we have a forum. And this forum is really going to be the community of, a place for us or our group or our members to have a community, to ask questions, to get to know each other. And one thing that's different about what we're doing versus any of the other training programs that we've worked with in the past is we want our members to have the ability to communicate one to another. A lot of times in the past, training companies didn't want their students to talk together because maybe they'd have a complaint or something like that. Everything that we're doing is 100% clear. There's no hidden agenda or anything like that. And so because of that, the Member Center is going to have both the forum where members communicate, introduce themselves, work on deals together, put together groups. We also have going to have a live chat feature as well in a chat room as well where members can chat. So we'll have chat sessions with me or with Shade or with both of us, and then also as a group, maybe Florida investors or certain type of investors can have chats and groups as well. And so we're really trying to create a community. Of course, we're going to have our blog here. That's where we're going to post all of the information just for the members. We have the chat room. We have the forms and links section, which has any type of form that you're going to need to contact counties, scripts, and also any of the links that you're going to use. So you talked about some of the services that, for checking property value or anything like that. We're going to have any important link regarding Tactile investing, regarding real estate, regarding business, set up here in the links and websites. You can click on any one of them to be directed as well. And so we'll have the Tactile auction websites, we'll have NACO.org, any type of link that you need or form that you need, we're going to be posting them here. And so we've already got a long list, but we're just going to continue adding information here.
Yeah, in fact, one of the questions that Heidi is asking is, as if we're going back to like a weekly webinar. I think we will. I don't think we've set the date yet. The regular day that we'll do it or the time, but we are moving back to full regular weekly trainings. We'll have all of those recorded, in addition to that, we plan on doing a lot more. I think there'll be those weekly trainings, but there'll also be a lot of other trainings that people can participate in or get information on. We'll also try to make sure that the training you get is specialized to exactly what your strategy is. That's one of the things we want to do differently as well, is being able to get people information that's relevant to what they're doing right now. And so the website now and the way it's structured, I think, will give us the ability to provide a lot of information. This is all the stuff we use right here in all of our own due diligence and research. So these links I think will be helpful here for everybody. In addition to that, we also have the training center. So we mentioned things like the weekly webinar. The weekly webinar, will be something you can register for here. We'll also be sending out the the emails for those, and other training resources like like a video library or interesting like the new center.
Yeah.
Here's the new here's the library, the course library.
And so, you're going to get so much training here. First, you're going to get our Ultimate Home Study course, which is our 750-page, 5-manual course. But in addition to that, you're also going to have the ability to download our real estate course, which is a 3-manual, 375-page real estate on all just different types of real estate investing, which can really help, especially if you're looking at tax deed investing, and several different other types of eBooks and training that we have available through here.
Yeah, so from this part of the website, you can download all of your manuals. Okay, so you'll download these manuals. In other words, just when you sign up to become a member of the program, we want to make sure that you have all of the training content, that you need, and that's why we make all of this available. So you'll have more content there, than you can probably handle. But again, we're not going to hold anything back. We want to make sure that our students are successful with this, and so Yeah, the first thing you would do is to download a lot of this material here and to start using that. But there are so many different resources that you'll have available to you.
Yeah, we're going to have the news center, the motivation center, we'll have podcast, the list, we have the auction calendars. Really, if we go look at services, we can see some of the, or underneath membership, we can see a huge list, and you'll see that this list is quite long with all of the different services that are available through membership.
Yeah, in fact, you'll notice here you can go through the section here on membership, and there's a sign up link here for the $29.95 a month, and you can use this to subscribe. We wanted to offer everybody that came on the webinar tonight something extra because it was the first webinar we've come back to. It's a relaunch, and so we wanted to be able to offer everybody on the webinar tonight something like a friends and family discount to the website service.
Yeah, and with this, we're offering 100% money back guarantee. So, if you join the training and you're not happy within those first 30 days, you're not satisfied, that you can go ahead and cancel, and we'll give you a 100% refund. We want to be upfront about everything we do, and most people that join the website we know are going to love it, and some students may stay for just a few months, that's all they need, and some students are going to want continual training. But with our membership friends and family discount, what we're going to do is we're going to let students sign up for $19.95 a month. You can cancel at any time, and then of course you're going to have that 30-day money-back guarantee as well.
Yeah, so this is for membership to the to the website to get access to all these things, to be able to attend all of the trainings. Beyond that, if there are people that want more specialized training or more individual training, we'll have more things available, like personal training, like team training, and different boot camps and things like that. But what we wanted to create, though, was an inexpensive way that people could get engaged with the training, something that wouldn't cost them an arm and a leg, but that would also give them the tools they needed in order to go out and be successful with this, and I think that's what we have.
Yeah, I mean, we have more tools available here on this website than we've ever had in our past, and in the past, our training program, they got the books and manuals with the seminars sold them for between $2,000 to $4,000, and so this gives an opportunity for anyone to get started, to see if it's something they like. We're going to offer that 30-day money-back guarantee, if you're not happy, and really just give everyone an opportunity to find out if this is something they're interested in. If it is, we've got the tools and the resources and the knowledge to help you be successful with it.
So I actually sent over a link just a minute here in the chat section. If you take a look in the chat section, you'll see a link there. What this is a link to pull up the page that you can see in front of you right now. This is a hidden page for to sign up, the VIP sign up, or the friends and family discount, basically, for the $19.95 per month. And so we wanted to get this out to you so that anybody attending tonight can sign up at that discounted rate. I don't know if we'll ever have this available again.
No, I think we're going to do it first. We haven't set how many we're going to do it to. And most of you that are part of the webinar, probably, we have some students that have been with us in the past or a long time ago, but a lot of people are people that have been introduced over the last year or two. So within the next week or so, we'll end up sending this out to, not this, but our program to our 40,000 other students. So this will be limited. Maybe we'll do 40 or 50, something like that, people who sign up, and then we'll just do the regular $29.95.
Yeah. So yeah, we did want to make sure that everybody had that, so that if you decide to do it later, that you try to grab that link, or at least remember it, or get it down somewhere here, because it won't be around for too long. But it will give you the chance to sign up for about 50% less, a good chunk less money on a monthly basis, and that will never go up. So
yeah, it's gonna be 70 cents a day or whatever it is to have the full training access. And so, we could spend an hour just going through all of the services that are available on here. If you go to the services page and look underneath the membership, you'll have a list of all of the things that are available in the program. You can see it's quite a long list. It'll go through and talk about all the things that are available.
Yeah, in fact, it starts right here, and it goes way down. It basically includes all the features here on the website that you can take a look at. We've actually kind of skipped over what the service does as well, which is to provide tax sale lists. That was originally the whole reason why we started a website. Originally was just because students need tax sale lists, and so oftentimes we're gathering the tax sale lists anyway for the different research that we do. That we started providing it. Obviously you'll be able to use the website to get the most recent tax sale lists, to get to see the auction calendar and to have an idea of what's coming up and what's going on. In addition to that, we'll have other resources like the news center, over there in the training center that we went across a couple minutes ago to show new things that are changing, your articles that have come up recently.
Yeah, and the Profile Center is a good example of the training that we did tonight. We went through and talked about some of the different strategies that are available within tax lien and deed investing, and that's really where the Profile Center will go into detail. We have 8 different investor profile types that'll go over certain strategies within those profiles. So when you go to the Profile Center, you can actually pick a specific strategy to get started with. Let's say you're interested in over-the-counter tax liens. Well, there's going to be a profile and a list of strategies that you're going to utilize for that specific profile. In addition with that, you're also going to be able to have a list of all of the states where you're able to use that strategy. And then within the Profile Center, we'll also have a list of all of the state profiles. So you can go pick an investor profile, see what states are available, and then go ahead and pick a state and review the state to get started with.
Okay, let's see here. Oh, excellent. We have so many good questions here. Let me just look here. We'll also be getting out here messages here to different people that we've talked to. I know that some of the questions here are questions that people kind of want to answer personally here, and so we'll be sure to contact you guys to let you know, just because we've had different people we've worked with here in the past, and so we'll see if we can get some different answers here as we're wrapping this up. Let me see here, other questions. Okay, now let me just make sure I've also got you that link here again. What I'll do is I'll reply here. There we go. Okay, I'm going to put it right here. We'll just reply to all. Okay, there we go. If that worked. Now I just tried sending that through the question section to all, so it should be down in both the chat section and also in the question section. There should be a link there. It's basically just taxsalesupport.com/VIP_sign-up. So that should bring you directly to this page here. So
in addition with that, everyone who's signed up for the webinar or attend the webinar will send you an email with this information as well.
Perfect. All right, let's see here. So, yeah, in fact, time-wise here. So we'll get the recording of this ready to go, and aside from that, over the next week or so, you'll probably see a lot of things start to change, just because we're relaunching and doing so many different things. So, I think we're excited to work with everybody. We're excited to work with the people we've worked with in the past, and also all the new people that are available. We also wanted to show everybody here the other sites that we have that are available. One of them here is secondarytaxlien.com. So this is the website right here, and this website will tell you about secondary tax liens and how they work, maybe in more detail than we've mentioned today. But primarily, it's there to kind of help people understand what it is, how it works, and then give them a way to contact us. The second website that we have is secretsoftaxlieninvesting.com, and again, this is also a new website. So if you don't have the ebook here, Tax Lien Investor Secrets, if you don't have that free ebook, go to Secrets of Tax Lien Investing and go through the process there to get that. You can download that ebook. That's a pretty handy ebook here.
Yeah, we've changed out Secrets of Tax Lien Investing, and this will be our primary free resources where we'll offer free ebooks, free training, and then of course Tactile support is where we're going to have our membership program with all the list and everything.
All right, perfect. All right, so I think with that being said,
yeah, just again, we want to thank everyone for being on the webinar this evening. We look forward to working with you, and we look forward to having some of you guys be successful with us in tax liens and deeds.
Yeah. Oh, and by the way, here I just noticed here more questions. Oh, awesome. Yeah. We just got somebody. Already have people that are they're signing up here, and yeah, it's just it's /VIP_sign up, and that should get you in. Oh, perfect. I see that did work. And if you have any kind of trouble signing in, let us know. We'll go through and check everything here, to make sure that the password protection, everything's working okay.
Yeah, one thing I forgot to mention, and you'll see it in the list of all of the benefits, is once you've registered, we're going to send you a link, or once you've registered, you should be taken to a page where you're going to fill out a profile. And either Shade or myself is going to essentially take that profile and put together you a personal strategy and give each one of you a personal call, spend 15-20 minutes with you and discuss the strategy. So we talk about it in the membership page, but essentially that's what we'll have you do is we'll have you fill out that form, send it to us. Then we'll be able to take that form and put together a good strategy saying, okay, well, it looks like to me you'd be good for over-the-counter tax liens or secondary tax liens or tax deed investing. Just we'll be able to determine through that profile what your goals are and then put together a strategy that works good for you.
Yeah. In fact, that's part of what's different about this, I think, from anything else is the training will be very specific to what you're trying to do and what you want to accomplish. And so we're really looking forward to this. Again, we're so excited to be doing this here. Let me just get this message here.
So if you guys have any questions, definitely send us an email. We'll get you out an email with the replay of today's webinar, and then we're going to pretty much be adding new content, new videos, almost on a daily basis.
Yeah, and for some of the lifetime members, people like that. You can just get in contact here with us. We'll get your username and password created, get that set up so you got access to the site. So again, we just appreciate everybody coming, and let me just make sure here. Oh, actually, some more questions here. Sorry if I'm pausing here. I'm just reading through different comments. We trained for so long. We've got so many people here that have been a part of the training before, and we're excited and happy to be here and to do it. If you'd purchased lifetime training before, don't worry about trying to purchase it again. We'll make sure you've got website access to all of that. You'll always have access to our training and things like that. So. If that's the case, just contact us and let us know so that we'll remember to get that, to make sure that you're able to log on and get on the site. So, perfect. Well, if that's all, I think we'll talk to everybody soon. Keep an eye out on the email. We'll send you a follow-up here on this, and hopefully we'll be talking with and working with a lot of you soon.
Have a good evening.
Yeah, we'll see you guys later.